We are all aware of Tesla CEO Elon Musk banning the acceptance of Bitcoin due to environmental concerns. Bitcoin using proof-of-work protocol leads to massive usage of electricity for the mining process. We have a piece of cake for you all. Bitcoin difficulty rates are dropping with time, provided China's cryptocurrency crackdown continues. Bitcoin's miners and investors are going to experience profits as never before. With updates in a few months, Bitcoin would soon gain its momentum and surge up. Hello guys, this is the Crypto Society. This could be the best place if you are willing to update your knowledge about the crypto market. Hit the like button, subscribe to our channel for all the upcoming news of the crypto market, and press the small bell icon for timely updates for all uploads on our channel. The topic for today is a bit complicated, but don't worry. We'll try and simplify things for you to understand them with ease. Bitcoin's energy consumption. For trading cryptos, we need to undergo a process called mining. For example, person A wants to send Bitcoin to person B. So to validate the transaction, engineers have to solve a complex mathematical puzzle. Then by solving the puzzle and validating it successfully, the transaction is then added to those interledger connectivities. These decentralized connectivities are termed a blockchain. This process is necessary to follow. This consumes energy for mining and storing the data. The entire transaction approximately takes 10 minutes. Every year, Bitcoin consumes a gigantic amount of energy for its mining process. Cambridge University reports around 116 terawatt-hours of energy is consumed by Bitcoin. That's higher than the energy consumed by some countries like Netherlands, the Philippines, and Singapore. This energy consumption contributes to 0.5% of total energy consumption by the world. Shocking, right? Not only Bitcoin, but every crypto has to undergo this procedure and consume large amounts of energy for its processing. It's just that Bitcoin consumes a bit more energy due to its low level of updates for machines and following a POW protocol. Now the question arises, where do all these processes take place? This will help us relate to the topic we will be discussing further in the video. All this mining process takes place in different parts of the world. The US, Malaysia, Russia, Kazakhstan are major players, but the king of all the mining processes is China. China processes around 65% of the mining in the world. Sichuan province is the second largest mining processor in China. However, it has dropped down now, but is still a large processor for mining. China's crypto crackdown. You might have heard about China and its government banning cryptos. This is just a glimpse of the drama you are aware of. A bunch of people are aware of the entire drama by China for the crypto crackdown. Soon you'll be one of those people who know what happened in China. China's crackdown is nothing surprising, as priorly a couple of times China has taken this step. In 2013, China ordered third-party payment providers to put an end to the use of bitcoins. The next crackdown was in 2017 when China authorities banned the sale of bitcoins, but resumed again in 2019. Each time Beijing thrashed out cryptocurrency, but with time all the rules softened, resulting in the processing for crypto industries in the same process as before. This crackdown seems a bit different than the prior ones. The Chinese government is trying every way possible for Bitcoin and other cryptocurrencies to disappear from the Chinese financial system and economy. In May, the People's Bank of China ordered a ban on financial institutions and payment companies for providing crypto-related services to its customers. In June following this ban, China suspected people using cryptocurrency in villainous ways. This resulted in mass arrests in China. In the same month, banks and payments companies were pressured by regulators to ban all the crypto-related services to their consumers. Even all the official accounts related to cryptos were suspended on Weibo, the Chinese version of Twitter. A massive crackdown call for trading and mining of Bitcoin from China affected the world's Bitcoin miners. The actual reasons behind their years of the planning for banning crypto tokens are known by none. There are just rumors. One prediction says that the 100th anniversary of China's Communist Party and their goal of cracking down on all sorts of undesirable behavior is resulting in such actions in China. Another prediction depicts their theory of clearing the path for their own central bank's digital currency yuan. However, experts say that yuan and cryptos are highly different, even though their functioning is varied. They do not follow the same path, and are not direct competitors. So, how is this theory related? This is still a question mark, but this theory is slightly related to the ongoing situation. There are even rumors that the Chinese government is fearing the decentralized nature of the crypto market. The functioning of cryptocurrency in their country could report huge losses with a slow-moving economy. We don't know how long the crypto crackdown will last in China's financial ecosystem. The reasons are not known by us. These could be revealed when China officially comments on their thought behind the crackdown. Something is happening behind the curtains other than this crackdown. What is it? Let's take a look. Bitcoin difficulty rate drop. After the crackdown by China for the crypto market, everyone feared the shadow for Bitcoin miners as the majority of the miners belong to China. But with time, Bitcoin algorithms managed to adjust suitably to ensure the productivity of miners doesn't continue to fall off a cliff. With the constant adjustments, a Bitcoin mining engineer commented, "This will be a revenue party for miners. This will help the miners to gain larger profits in Bitcoins through a mining process." This all sounds good. Everything seems to be going over your head, right? It will get much clearer in the next couple of minutes. As we already discussed, it takes around 10 minutes for miners to validate and update the transaction in the blockchain format. Due to China banning the mining for cryptos, the market suffered a major problem. If the number of miners drops, then the number of Bitcoin validation also drops, as the time consumed for mining even rises for every transaction. It would take almost 14 to 19 minutes for every Bitcoin mining, depending on the complexity of the transaction. It was noted for the first time in Bitcoin's network history, when about 50% of hash rates affected the network because of the drop in the targeted geographic minings. This showcases us how difficult it is for Bitcoin's miners to mine. A magical Bitcoin algorithm self-regulated its functioning and made it about 28% less in the mining process. Wow! This is really amazing and a powerful concept. The Bitcoin algorithm is designed to handle increases and decreases in the mining machines. It is self-regulatory, hence it does not require any outside person of the community to guess what is happening with Bitcoin. This algorithm restored its block time window back to 10 minutes per transaction. With less competition and less complexity, any miner with a machine connection, be it private or public operator, would experience higher profitability and more predictable revenue. Through sources, it was reported, assuming the constant power rates after the changes in algorithms were restored, miners were gaining around $29 per day. Whereas before the changes and dips in the mining machines, miners reported a gain of $22 per day. This is a really good gain for miners. However, in the long run, miners' fees can be influenced by the prices of the coin. Whit Gibbs, CEO and founder of Compass, a Bitcoin mining service provider, said, "We expect miners to be approximately 35% more profitable." So, this update is surely benefiting the miners and their community. But what about the investors? Will the price rise for Bitcoin? Will this update prove beneficial for Bitcoin? Some of the crypto experts predict the price of Bitcoin for the next few months. Let's glaze over it. Price prediction of Bitcoin. Experts say that it is difficult to predict how long the hash rate's deficit could last. This might not last for the long term, but won't change overnight too. It will surely take the coin 6 to 15 months to migrate for the displaced mining hardware. For these months, miners would enjoy the increased revenue. Despite China's crackdown, with this restoring Bitcoin already surged up by 5%. It is always difficult to predict the prices of crypto tokens. Some of the predictions say that Bitcoin is resembling a bullish trend and is expected to shoot up. Soon Bitcoin will surpass its all-time high of $60,000. It may take some time to stabilize and for substantial growth, but soon Bitcoin will gain its momentum. So, what are you waiting for? This could be the last golden opportunity to invest at such a low price and gain hefty points to your portfolio. That's all for today's video. Hope this video disclosed everything you were wishing to know. Like the video, subscribe to our channel if not yet subscribed, and click on the notification bell button. Share with your crypto friends and colleagues so they're also updated about the ongoing drama behind the curtains for the king of the crypto market. Thanks for watching.